All right, guys, stick with me today. We got a special guest. We're going to talk about taxes, everybody's favorite, with St. Lucie County Appraiser Michelle Franklin.
Yeah. You better get fired up.
Michelle, how you doing today?
Well, how are you?
I'm amazing. I appreciate you doing this. I know it was probably 3-4 years ago now you did this video with me, and we talked about a lot of the questions that people in St. Lucie County have when it comes to property taxes. And it's been a while, so I thought, man, I'm still getting a lot of the same questions from clients. It's always a good video to do, and you were one of the most available, approachable people that we've got in the county office there. So I just want to say thank you for doing this.
Oh, thank you. It's my pleasure. It's truly an honor to be with you.
Yeah, well, thank you. You do a phenomenal job, and I got to throw a little pitch out there for you. As a realtor, I am in those county offices, city offices, whatever, all the time. And when it comes to government, you tend to get a certain mindset around what kind of customer service you're going to get. But I can tell you, when you walk into the property appraiser's office, I don't know what you do or how you train those people, but it's like walking into a privately owned company. It is run smoothly. I remember the first time I came here, I had the gal actually say, hey, take a chair, sit down. She spent 15-20 minutes with me explaining how all this worked. It was so amazing. I was so impressed. I'll just tell you 100%. Well, number one, I'm voting for you in November. And number two, I'm happy to. Not because you're a friend, not because I know you, but because you do such a good job with it. So thank you.
Thank you. I really appreciate those kind words. Yes, our goal is superior service here. And, we're human. So we may not make that every time, but we make an effort to have superior service at every interaction, whether it's on the phone, through email, or in person. And, government gets a bad rap sometimes because it seems like we can make people jump through a hoop of fire just because we can. And, we really try to not do that in the property appraiser's office. The county is actually required to house us, but we answer to the state of Florida. And so, there's a little separation there, and we try really hard to be the best local government office that we can be.
And you are. And, you said you're human, but I've been here for 5 years and I have yet to have an issue with you guys. I think you're absolutely phenomenal. So I shouldn't even say have an issue. You guys are blowing my mind every single time. It's amazing. So I want to start with a common issue that I see as a realtor. And I'd like to ask you how a buyer, specifically a home buyer, should be looking at this. I will look at house A and house B, and let's just say it's the same exact house. It's the same floor plan, same everything. But one house says that taxes are $2,000, and the other house says that taxes are $5,000, right? 2.5 times more. Can you talk about that a little bit? Why you would see that, and not just why you would see it, but what does it mean to the buyer? Are they truly going to get lower taxes by buying house A that's currently at $2,000 versus buying house B that's at $5,000?
It's such a great question, and one that I get so frequently. Oftentimes when we get new home buyers or those that are searching in the office, and we start going through this conversation, the first comment is, that's not fair. So let me start by saying it's not fair. The Florida property tax structure is unlike, in my experience, any other throughout the nation.
Yep.
And it is a very unfair system. It's the same for everybody, but it's unfair for that new person coming in.
Yeah.
Because the longer you've been here, the greater your benefit is. So what I wish I could do is I wish I could know everyone that was shopping for, let's say, A house and B house, and looking at them saying, oh, maybe I want A house because it's $2,000 cheaper in taxes.
Yep.
To let them know it is not going to be $2,000 cheaper for them when they are a new purchaser. Yep. So if I come from out of state, I'm coming with no benefit at all. And that property that I purchased is going to come up to fair market value. Doesn't matter what the prior owner was paying. So it's important to know that as an out-of-state or a very first-time home buyer, my taxes are going up to market value. They're going to be more than the prior person. They're probably going to be more than the neighbor next door. It's going to be quote unquote unfair, right? if I am moving from within the state of Florida, I may have a homestead benefit currently, and I can use portability to bring my tax savings benefit from my current property to my new property.
Yeah.
And so oftentimes I'll have a neighbor that calls and says, there's no way, it's not fair. They moved in the same, maybe they moved in the same week I moved in. There's no way that they have a benefit. I said, where did they move from? They moved from Palm Beach County.
Yeah.
They were living in Palm Beach County for 15 years. They had a tax benefit there. So they brought it to St. Lucie County, and now they are paying half of the amount of taxes that their neighbor are paying.
Yeah.
So it's unique for each individual owner as well as each individual property. So like you said, even if it's the exact same house, literally, same type of view on their lot, same exact build, they could be paying significantly different amount in taxes.
Okay. I've got a series of questions I'm going to ask, and I'm thinking of how to best ask these in order so that people can understand this fully. So we'll see how good of a job I do here.
And can I just jump in while you say that right there is, please, we do this all day, every day. So call us, and I know you, Joe, we've talked, we've texted back and forth times, whatever the case may be, but reach out to us. We're happy to walk through and look at each individual situation and give you the correct answer for that. So I love that we're doing this and giving people a high overview, but I also want to remind them we're here to help them. I want them to have every exemption they're entitled to. I want them to have every benefit. I get there's no benefit from me getting more tax dollars. I'm not a taxing authority that can spend the tax dollars. So please call us and we'll give you information as you look at an individual property.
Yeah. And to your credit, I mean, it's probably once every 4 or 5 months, but I've texted you before and said, hey, here's a scenario. Can we just review this? I want to make sure what I'm saying is 100% accurate. You're the busiest person in the doggone office, and you've texted me before on a Tuesday at 8:30 p.m. You've called me. You guys just have been so available, so easy to work with. Happy to do it.
Happy to do it. If we're not giving you that information, where would you get it from?
Well, exactly.
So
yeah.
Understand that importance. And, this is in general, the largest purchase someone is going to make. And so we want them to have all of the information and to get it right.
So talk to me a little bit about assessed value. When somebody buys, say, a $400,000 home, you're going to go on and you're going to see that the assessed value is not $400,000 later. And not only talk to me about how that equation is figured out, but talk to me about the difference in assessed value from Joe owns the house and he's been here for 10 years. And all of a sudden Bob buys from Joe and the assessed value skyrockets. Talk about the why behind that as well.
To kind of even go before that, back up one. Remember that every year we're doing 3 values if you have a homesteaded property, okay? So value number 1 is market value. So what I like to remind people is that is a market value for tax purposes only, and it's established on January 1 each and every year. So, depending on when you purchase, maybe you have the prior owner's benefit for a period of time, but on January 1, we start out and we give a market value to all 185,000 real estate parcels that we have in St. Lucie County. Okay, market value. After market value, we have assessed value. So what's the difference between the two? That's the cap. Every single property in Florida has a cap from the second year of ownership going forward, and that is a 3% cap if you're homesteaded or a 10% cap if you're non-homesteaded. What's non-homesteaded? Vacant land, second home, whatever the case may be, commercial, whatever not. You have a 3 or 10% cap. So assessed value, market value minus assessed value is that cap difference, right?
Yep.
Going from assessed to taxable, which is the amount you actually pay your taxes on, takes off any exemptions you may have. So you have a $50,000 homestead exemption. That's the difference between your assessed and your taxable is the exemption. So when we look at our neighbors, generally speaking, our market value is going to be very close to our neighbor, right? Because our land is right next door to each other.
Yeah.
We may have a similar house or the exact same house. Market values will be the same or real close. Assessed value minus that cap, that's where it gets significantly different. depending on how long they've owned that property and what the real estate market has done during that time. And then furthermore, taxable to exemptions, which can mean, just a $50,000 homestead exemption, or maybe I added in a, senior exemption, widowers, or something like that I also qualify for. So does that kind of help with how assessed values can be significantly different?
Yeah, I want to come back and ask a couple more questions on that. But would you go into some of maybe the top 2, 3, 4 exemptions that you guys see and how that exemption adds into the math?
So the top one that, again, you just have to be on the deed, you have to own the property, you have to occupy the property and be a Florida resident. That is a homestead exemption. That's the easiest one to get, and that is the most valuable, in most cases, exemption to get. So that's, people just own, occupy, being a Florida resident. Please, please, please call us, come in, file for that homestead exemption. That's going to save you the $50,000 off your assessed value. So here in St. Lucie County, that means it's going to save you roughly $800 to $1,000. Okay. Then there's some additional exemptions. I invite people to look on our website or call us to go through a list of those additional exemptions. For most people, homestead is the only one they qualify for, unless you are a widower. And so there is another $5,000 exemption for that. That's going to save people about another $100 a year for widowers. If you've remarried, you don't qualify. So it's just those that have lost a spouse, and you just need a death certificate to apply for that. And then, of course, we have some additional ones that relate to disabilities, especially for those that are legally blind or in a wheelchair, and they can get a total exemption from taxes. But
wow.
Please call us for that. The only other one I want to mention too is we have what's called a senior exemption, person 65 and older. That is that they're 65 or older on January 1 of that tax year. However, this is the exemption you really don't want because it's for the limited income senior. So that means that the total household income has to be roughly $36,000 or less, generally excludes Social Security. Call us every year. We'll give you that exact dollar amount. It's set by the CPI, the Consumer Price Index, every year. We'll give you that information every year and see if you qualify. But I hope people don't qualify for that because I hope everything is going well and they have a household income that's higher than that. But if that is a situation that you might be in, please call us.
Appreciate all that. So now let's go back to the difference in some of these values. So I'm looking at my just/market value on the paslc.org website, your website there. And that value is a hair lower than what I had paid for it about 2.5 years ago. And it's considerably lower than what the actual value is. How is that? Is that just market value calculated by a human or by a machine? And that is the one that's every January 1st. How is that calculated?
Yeah, so both. We're doing mass appraisal. So again, we're doing 185,000 properties on January 1 every year. My team that places value on the property is, I'm trying to think, today is eight professionals in total that are placing value on those. Yeah. So yes, we're using a computer system to do that. Then we do at a very high level look at sales ratios, and there's a lot that can go into it. It's not a dartboard, but we do kind of look at a high level of each property and see where we're at in relation to that sale. But remember, again, we're always a year behind. So we're doing this on January 1, 2024. We looked at all the sales that happened January through December of 2023 to come up with that value. So in the market we're in now, that tends to be a little less than a true value that if I were going to make an offer on Joe's property today, what that might be, in March. I'm like, what month are we in now? We just changed.
Gotcha.
So you kind of got to remember that as well, that's going to come into play. And again, this is for tax purposes.
Yep.
So even though Florida is a 100% fair market value state, in general terms, we're a little below 100% of the fair market value.
Okay, so now if I understood correctly, and I'm going to make a statement first, correct me if I'm wrong. When you're talking about caps, every year, regardless of what taxes go up, if you're a homestead property, you're capped at a 3% increase maximum, correct?
For your value. Remember, this is a value.
Yes.
So we here in the appraiser's office, we do value, exemptions, and mapping. I don't have anything to do with the tax rate, which value multiplied times rate is going to give your taxes, but I can't control the taxes. I can control the value. So the value is capped at a 3% increase as long as you have homestead, or a 10% increase if you have a non-homesteaded property.
So now I am seeing my assessed value is about $65,000 less than my market value, but I've only lived here 2 years, so I don't think I've gotten a whole lot of caps.
You do.
I do.
That's
Talk to me about that.
Yep, that's that cap. So in St. Lucie in particular, now I can't, this system, if you will, is the same throughout the state of Florida. Okay. But each property appraiser's office displays it a little bit differently. Are you by chance looking at your trim notice? I know you had
no, but
slc.gov is our website address. So if you click on your trim notice, we try to make it very easy here in St. Lucie. On page 2 of that trim notice, and remember, those are up throughout the entire year on the website. So if you are looking at a property and you say, I wonder what kind of cap they have on that property now, so that they could have taxes, in a value that is half of the neighbors. In the purple section in the middle of page 2, it's going to say assessment reduction portability. That is your 3% capped benefit that you have. And that is the number that you, and that's you, any property owner in St. Lucie County that has a homestead, can actually take to another property in Florida. That's your portability benefit.
So mine is called Save Our Homes. Is that a Joe Rosen specific thing, or is that what everybody has?
Save Our Home. That was what it started out. It was the Lee County property appraiser back in the early 90s said he made this part of legislation that it was going to be a Save Our Homes. We're going to put this 3% cap on value so that we don't tax people out of their Florida homes. Because we know Florida is, comprised of a large senior population that doesn't have, additional income coming in most cases. And so that was part of the Save Our Homes. That means that you have that 3% cap on the property.
Okay, so if my home, I don't know the answer to this. This isn't a softball, but let me pull up my thing here. So let's say my home, I'm going to use easy numbers here. Let's say my assessed value is 300 grand, and you're going to purchase my property, and you're would that matter? Can my assessed value go up more than 3% when you purchase it?
Absolutely will. It will automatically go up to market value. So any property that I look at, I want to look at their market value and base my estimate of taxes off of that owner's market value, not their assessed value or their taxable value. Because assessed and taxable are particular to individual benefits. Market value is the property's fair market value each and every year.
I got you. Okay. So if my market value, let's say it's 400 grand for easy numbers, when you buy it, it'll go from the assessed would go from 300 to 400.
Unless, and I'm making this more difficult, and I don't mean to, but unless I'm moving from Florida and I'm bringing my benefit with me, I too may have $100,000 benefit that I'm bringing with me.
That makes sense.
You can bring up to $500,000 of portability. And we're seeing that in St. Lucie County. Our friends from Miami-Dade that owned and occupied their property for a long period of time, they're bringing a very large benefit with them to St. Lucie County.
Okay, so if I've got a $65,000 Save Our Homes assessment reduction, is that because since I've owned, the market value has gone up that much and even a little bit more, and I only went up 3%?
Exactly. Yay!
Look at this guy, man. This is tough. Like, I'm really good at math, so I honestly empathize for people who read. This is tough.
And you're involved in real estate. You're watching that every day. So the common person that isn't familiar, this is a concept to grasp. It takes a little time and commitment to understand what's going on.
Okay, so now I want to, so I got a buyer and we're looking at a property and they're going to purchase it for 400 grand. So I'm going to tell them, hey, this is roughly where I'm guessing your market value is going to be. And here's where your assessed value is likely going to be. Now,
remember, their assessed value is going to come up to market. So the very first year you own the property, market and assessed are going to be one and the same.
Yes, assuming they don't have portability.
Assuming they don't have portability. Good job.
So now let's say we're still at $400,000. Where do I find the amount they're going to pay per $1,000 of assessed value?
Easiest way to do is to go onto the property record card and click on the tax estimator at the top. There's a little banner in blue and it says tax estimator. And so that tax estimator is actually for that particular property. So the only time I would say that this isn't the best tool to use is if it's a brand new build and we're currently valuing on the land only.
Yeah. Okay.
And
so
in those cases, I say call us because it's going to take a little bit of work to get there. We're going to talk to you individually and we're going to give you an estimate. But if you're looking at, a regular house that's been there for 3 years and you're like, I wonder what my estimate will be, click on that particular property record card, estimate of taxes, slightly under there, you're going to see, are you going to file for homestead or is it a non-homesteaded property?
Yeah.
And we'll give you a range of taxes based on either of those. But remember, those do not include non-ad valorem taxes. Non-ad valorem taxes are taxes that are not related to value.
Yeah.
So in St. Lucie here, that's our trash collection, in Port St. Lucie, stormwater, things of that nature that are not based on the value of your home, but yet the service.
Okay, so currently my non-ad valorem is roughly $1,700, and I'm paying roughly $6,000, bringing me to $7,700. But when I look on the tax estimator, it says if you're going to be homestead, it's going to be $8,500 to $9,300. That math is assuming that person is buying with no portability and the assessed value is coming up to the market value, correct?
Remember, absolutely. The assessed value is coming up to the market value 100%. And it's also including the fact that we're probably going to see a little bit of a value increase from your market value today to what our 2024 market value will be. Because we want to give people the right tools to plan appropriately for them. I would rather somebody have an extra $300 in their escrow than to come up and say, I'm $1,000 short.
Yeah.
That becomes challenging for people. So it's an estimate, but we generally lean more towards a little bit more of a buffer.
Okay, so if we look at the $8,500 to $9,300 that this is saying it would be on my home, I would then have to also add in the $1,700 of non-ad valorem, correct?
Correct.
All right, man, look at me. I'm getting sharper. All right.
You are doing it, man. I'm so proud of you.
We're working on it. Okay, so you just answered another question that I knew of, but I didn't know how to figure out the exact number, and that was portability. I didn't fully understand how do you calculate the number that's ported over, but knowing that it's page 2 and it's that purple area under assessment reductions and portability, I can see mine is exactly $64,904. So now I go buy, let's say, a $500,000 property, and let's say that, market comes out to exactly $500,000. My assessed would be $500,000 minus let's just say $65,000. So my taxes would be based on $435, correct?
Well, you're because you have portability, your market, I forget the numbers you said. Your market was 500.
Yep.
Your assessed is going to be minus your cap.
Yep.
60 whatever.
65.
Right?
Yep.
65. And then what do we got to take off from there?
Oh, plus my homestead.
Your $50,000 exemption. Yep.
Yeah. So it says first homestead and additional homestead, and they're $25,000 each. What's that all about?
So originally homestead, originally there was a tax benefit and I forget the date right off the top of my head, in the 40s, I think. And it started out at like a $5,000 benefit. Long story short, that went up to $25,000. And then in our recent time, $25,000 just wasn't enough. So they did an additional $25,000 exemption. It is not a 50 because that second 25,000, when that was voted in, they actually held schools harmless. So you do not get the benefit of that exemption, that second 25,000 off of school.
On the school portion. Okay.
Uh-huh. So that's why you see a 25,000 and then another 25,000. It's your value of your property has to be a little higher. So not everyone qualifies for that. You actually have to have more than $75,000 of value. I know in today's world that kind of moved up, but there are some areas of the county which still have homes that are not quite to that value. So they would not receive the full benefit of that second 25,000 unless their total market value is over 75.
I didn't know the school thing either. That's good to learn.
Yeah, and that's part of it with the 10% cap as well, that the schools are held harmless in that. So you do pay full school tax on that portion as well.
It's not a huge deal, but yeah, that makes sense. So I'm gonna go back to a question. I think I pulled you off track here. It's my fault. I'd asked you if my home is worth 500 grand, how can I go figure out how much I am supposed to pay per $100,000? And what is that called?
Well, and I guess part of it, what I would say to most people, they don't need to figure that out. It doesn't matter how much per 100,000. You know what I mean? People get caught up in that millage rate, and we actually have about 39 of those different rates within our county. Yeah. So it depends what area you live in, and it's going to be very challenging.
I see what you're saying.
So, I mean, if somebody has a particular need to figure that out, call us. We'll work through their property and give them that number. But in essence, you just want to know that your market value minus that cap gets you to assessed, minus your exemptions gets you to taxable, and that's the amount of taxes that you're paying on that value. Not sense. Your actual market value.
One question.
But basically, your rate, depending where you are in the county, to answer your question, your rate times that value. So I got to know in order to give you that, I got to know what your rate is, which particular section area of the county you're in that particular. Yeah.
That makes sense. Okay. So I think I got two last questions.
Okay.
One question I get all the time. I'm looking at my trim right now, and there are 3 columns, 1, 2, and 3, and they are orange, pink, and green. Can you explain the difference between those 3?
Yes. So what I like to remind people that when you look at that trim, that's page 1 you're looking at with all those 3 columns and a whole lot of numbers, because those are your taxing authorities down the left side. Okay. So your taxing authority, we have 24 different taxing authorities in St. Lucie County. You're not going to have all of them on your tax bill because you obviously don't have the city of Fort Pierce on your bill, right? So they're depending where that property is located, depends which taxing authorities that you're actually paying taxes to. Where was I going with that? I just completely blanked out on, what are the columns? So sorry.
It's okay.
I get going. I was like, so you have those 3 columns. Basically what they are is they're telling you what was the rate last year, what is the proposed rate for this year, and if they were to receive the same value amount, they being the taxing authorities listed on the side, if they were to receive the same value amount that they received last year, what would your rate be? So most people say, I don't understand. This is all. Column 1 is kind of just a reminder. This is what you saw last year. Column 2 is like, okay, if these taxing authorities didn't take any value increase, what would your taxes look like? And the third column is, this is what the rate they're proposing. So this is what this looks like if in fact they pass that rate that they're proposing. Generally speaking, in my 20 years experience here in the office, the easy thing is go to column 3.
Yep.
That's what they're proposing. It cannot be higher. Column 3, the amount when your bill comes in November, mailed from the tax collector's office, it cannot be higher than that amount, but it can be less. So if those taxing authorities decide to reduce that rate, it will be less than column 3.
Gotcha. And all of
there, Joe, may I say something real quick about that? Yeah. Because, I can't help but get excited over, the trim notice and hope that everybody opens it. It comes in mid-August every year. If you do not pay attention as a property owner to page 1, I'm not going to give you a hard time. What I really need you to pay attention to, page 2, we affectionately call our side, the property appraiser's side. That's all the data that we're actually working on throughout the year. And I really would appreciate everybody checking, number one, top right in yellow, what your value is, that market value. You want to ensure that you agree with that market value. And then the middle of the page where the blue, your exemptions are highlighted. We want to make sure that your exemption is in place every year. Is it, in theory, is it going anywhere? No, but always double check. There is a very short window, 25 days from the date we mail that notice in mid-August, that we can make any corrections. So generally by September 10th, 11th, 12th, some 15th, somewhere around there, depending on the calendar each year. Once we get beyond that, that roll goes back up to Tallahassee. And, we all know what it's like to get a change made in Tallahassee. So please help us by looking at page 2, looking at your value and your exemption every year. If there's any questions at all, call us, please, or email or chat or all the carrier pigeon, however you want to get a hold of us, but just contact us during that time so that we can make sure that you understand it. We can make sure that everything is accurate.
So I got 2 more questions. I'm going to lump them together into one, though. I get a lot of people who ask, do I have to apply for Homestead every single year or just once? And what's the timeline look like for applying?
So in theory, the deadline to file is March 1. Here we are today. However, with that said, if somebody has missed a deadline, please, please, please do not wait another year. Come see us. I can't ensure that you're going to get the exemption depending on what time it is in the process. But if there is anything that I can do, I will do it. I want every property owner to have their benefit. The difference between waiting another year can mean literally thousands of dollars for some people. So please, please, please call us or come in. If it is at all possible, we're going to make sure you get that exemption for that year if we can. Once we flip to a new calendar year, it really, there's, we just can't. If it gets beyond a certain deadline, we can't do it. But it is definitely easier shortly, a few days after March, if somebody comes in and says, oops, I just missed it, we can still slide that in and make it happen for this year. So I would say, don't worry about a deadline. Just call us. If you find out or you find somebody, you run across somebody that doesn't know about exemptions, doesn't have it, whatever day it is, get them in to see us or call us and let us help them no matter what day it is of the year. And no, you do not. I forgot. First part of that question was refiling. If you do not have a change made to the deed, you do not need to refile. So if you are looking to make a change to the deed, which sometimes that means putting your property into a trust, maybe adding a spouse, maybe adding a child for estate planning, please call us so we can look at your individual property, what exemptions you have. And, we're not attorneys. We're not going to give you legal advice. And we're certainly not CPAs and going to talk about how it impacts your income taxes. But we will let you know how it would possibly or not at all impact your homestead exemption and cap on your property, because you don't want to lose that cap.
So I do have one more question. I keep telling you I don't have any more.
Yeah, that's okay. I'm here for it all day long.
I appreciate it. I know you are. This is a personal question. So we have a trust that we had created this year, and you brought this up, so it kind of reminded me. And the name of the I forget what the name of the trust is, but it's not Joe Rosen Trust. It's something else, right? And we had submitted that documentation, and now online on paslc.org, it says Joe Rosen.
.gov, Joe. paslc.gov.
Oh, what did I say?
You said .org. I just want to make sure people get to the right place.
Woo! I appreciate you saying that. And it says Joe or Joseph Rosen, and then it's got TR in parentheses, meaning trust. Some people, it will say, the Miami Dolphins Trust instead of Joe Rosen Trust. How do you switch that? What are you guys looking at to determine what you're going to put online?
The trust. So when people file a trust, what we need to see is that first page so that we can confirm that, in fact, we're not trying to look through all your business, but we need that first page to confirm that you actually still own the property and that you have the rights to live there and, and occupy it. And then we're going to update that into the system as a trust. So depending on how it's written, we're not going to give away personal information.
I guess my question is, if it's called the Miami Dolphins Trust, let's say that's not what I named it, but let's say I did. How do I get it updated to Miami Dolphins Trust instead of Joe Rosen TR?
Call us. Call
Okay,
us, and we'll have to look at that page and we'll talk about it.
that sounds good. Is there anything I haven't talked about that tends to be an issue all the time with you guys that you'd like to share with us?
Well, the two top things you are so phenomenal that you hit on. Number one is that homestead deadline filing, which, if you miss the deadline, come in anyway.
Yep.
That's the number one thing. The number two thing is that trim notice every August. Please, please, please open that and review that information. Every year I talk to somebody and, I'm like, hey, did you open that notice? And they're like, no, I filed it with my mortgage paperwork, still intact in an envelope. So if you don't open it, I get it's very, very confusing. We do have a short video online that highlights each section of it. So if you want to learn a little more about that, I encourage people. It's on YouTube. You can also view it on our social media. And it'll walk through and slowly highlight each section of both sides of the trim notice to explain it a little more in detail, better than I did today. So I encourage people to do that. But if they heard nothing more than this one sentence, it's if you have questions or concerns regarding value, exemptions, or mapping, those are our three main responsibilities, please call us. We are here to assist. Please call us. We want to help.
I want to highlight a comment we've got from Marisol. She's amazing. She says, thank you, Michelle and Joe, for all the great information. Yes, Michelle, as always. Yeah, she's amazing too. I'll tell you,
as a photographer, she's the woman.
She is incredible, and I feel like she's at every daggone event in the county. She's a hard worker.
And almost everything I'm at.
So I'll tell you from experience, guys, if you want information, call their office, go on their website, physically go in. You'll have a wonderful experience. It'll be way better than what you're assuming you're going to get with a government office. And I'll tell you, I have not asked her for this. She has reached out to us, and it's not just me. It's, I assume, every HOA. She'll reach out, her office will reach out and say, hey, if you want us to physically come to one of your meetings, do a Zoom, whatever, we're happy to sit and talk about trim notices, homestead, whatever it is you want to talk about. You guys are so giving, so engaging. It's just, people gripe about paying taxes, but whatever I'm paying for your office, man, I'm more than happy to continue paying that. You guys do a great job.
Thank you. We really appreciate your kind words. I'm going to share that with the 70 professionals that are here day in and day out, going through some hard work, and I will definitely message them as soon as we're done to get that out. We have a Teams channel that we use in the office here, and I will place that message on there today. And I thank you for saying that. They work very hard. I'm very blessed to work with a great group. Thank you.
Well, thank you very much. Again, that website is PASLC for Property Appraiser, St. Lucie County, PASLC.gov, G-O-V. Thanks again, Michelle.